Yo, what's up everybody? It's your name from the Insurance Blueprint, and I'm holding two insurance bills in my hand. This is what most people pay for car insurance. Highway robbery. And this is what pay. I'm talking about slashing your bill in half legally by using the insurance industry's best-kept secrets. You see all those ads with the funny animals and jingles, but what they don't tell you is how many people get absolutely crushed by insurance costs. Denied claims, sky-high premiums. It's enough to make you pull your hair out. But it doesn't have to be that way. Stick with me, and I'll show you exactly how to take control of your insurance and save thousands of dollars in the process. Let's go. Alright, let's jump right into the first hack, the bundle trick. This one's a classic, and it's shocking how many people miss out on it. Basically, insurance companies want you to buy everything from them. Car insurance, renter's insurance, home insurance, even that umbrella policy you've been meaning to get. Why? Because it lets them offer you a friends and family discount. Except it's not just for friends and family, it's for anyone who bundles. I'm talking serious savings here, people. Let me give you a real-life example. Geico quoted me $120 a month for car insurance alone. Ouch, right? But when I asked about adding my renter's insurance to the mix, boom! Suddenly it's down to $78 a month for the same exact coverage. And it's not just me. I actually talked to an insurance agent off the record, and they admitted that bundling can save you up to 25% on your premiums. That's huge. Pro tip: if you really want to maximize your savings, bundle your home, auto, and umbrella insurance together. That's the magic trifecta right there. Trust me, your wallet will thank you. Next up, we're talking about deductible math. This might sound a bit dry, but stick with me. It's going to be worth it. Now, I know what you're thinking. Graham, math? Seriously? But don't worry, this isn't the kind of math that makes your head spin. It's simple, practical, and can actually save you a lot of money. But trust me, this is the good kind of math. The kind that puts money back in your pocket. Imagine being able to save hundreds of dollars just by understanding a few key concepts. Here's the deal. Your deductible is the amount you pay out of pocket before your insurance kicks in. It's like a threshold you need to cross before your insurance company starts covering the costs. The higher your deductible, the lower your monthly premium. This means you can actually control how much you pay each month by adjusting your deductible. It's a trade-off, but one you can definitely use to your advantage. By choosing a higher deductible, you can significantly reduce your monthly expenses. Think of it like this. If you have a $500 deductible and get into a fender bender, you're on the hook for that $500. But what if you rarely get into accidents? But if you bump that deductible up to $1,000, your premium could drop by 20% or more. That's a significant saving, especially over the course of a year. That's hundreds of dollars back in your pocket every single year. Imagine what you could do with that extra money. Save for a vacation, pay off debt, or just have a little extra cushion in your budget. Now, I'm not saying you should go out and get a $10,000 deductible if you can barely afford a parking ticket. It's important to find a balance that works for you and your financial situation. But if you've got a few $1,000s in savings and you're a generally safe driver, raising your deductible is a no-brainer. It's a smart financial move that can pay off in the long run. Just make sure you're actually putting that extra money aside each month, so you're covered if something does happen. This way, you can enjoy the benefits of a lower premium without the stress of not being able to cover your deductible. Chapter 3: Secret Discounts. The Insurance Vault. Alright, let's unlock the vault and talk about secret discounts. Those little-known gems that insurance companies don't exactly advertise. These discounts can save you a significant amount of money, but you have to know they exist to take advantage of them. These are the things they hope you never ask about, but trust me, they exist. And once you know about them, you can start saving right away. First up, we've got the Pay in Full discount. This one's pretty straightforward. Instead of paying your premium monthly, pay the whole thing up front and bam! You could save anywhere from 5 to 10% just like that. Think about it. If your annual premium is $1,200, paying it all at once could save you up to $120. That's money you could use for something else, like a nice dinner out, or even putting it towards your savings. Next, we've got paperless billing. Look, I get it. Everyone loves the feeling of opening a fresh envelope. But is it worth an extra 3 to 5% on your premium? I didn't think so. Opt for online statements and save yourself some cash. Not only does going paperless save you money, but it's also better for the environment. Fewer trees cut down for paper means a smaller carbon footprint. It's a win-win situation. Now this next one's for all my students out there. The Good Student Discount. If you're under 25 and rocking those A's and B's, let your insurance company know. They love responsible young drivers and might just reward you with a hefty discount. This discount can be particularly beneficial for college students who are already juggling tuition, books, and other expenses. Every little bit helps, right? And finally, we've got the low mileage discount. If you work from home, bike to work, or just generally don't drive that much, tell your insurance company. They base their rates on your estimated mileage, so if you're driving less than the average bear, you deserve a break. Imagine saving money just because you prefer to walk or bike. It's a great incentive to keep up those healthy habits. The craziest part? I actually had a State Farm rep tell me they never volunteer these discounts. You have to ask. So be proactive, people. It's your money on the line. Don't be shy about asking your insurance agent about any and all discounts you might qualify for. Sometimes, just asking the right questions can lead to significant savings. And remember, these are just a few examples. There are many other discounts out there, like multi-policy discounts, safe driver discounts, and even discounts for having certain safety features in your car. So the next time you're reviewing your insurance policy, take a moment to ask about these hidden gems. You might be surprised at how much you can save. The key takeaway here is to be informed and proactive. Don't wait for your insurance company to offer you these discounts. Take the initiative and ask. After all, it's your hard-earned money, and you deserve to keep as much of it as possible. So go ahead, unlock the vault of secret discounts and start saving today. Your wallet will thank you. Chapter 4. Ditch Comprehensive. Is your car worth it? This next hack is a bit controversial, but hear me out. Ditch comprehensive coverage. If your car is on the older side, comprehensive coverage can be a significant expense, and for older vehicles, it might not be worth the cost. Now, I'm not talking about your brand new Tesla here. High-value cars, especially new ones, definitely benefit from comprehensive coverage. But if you're driving a car that's worth less than $5,000, you might want to reconsider paying for comprehensive coverage. The cost of the insurance might outweigh the benefits. Here's the logic. Comprehensive covers things like theft, vandalism, natural disasters, stuff that's out of your control. These are important protections, but they come at a price. But if your car's not worth that much to begin with, and you had to pay for repairs out of pocket, would it really break the bank? Often, the cost of repairs might be less than the cumulative premiums you pay over the years. Let's look at the numbers. It's essential to do a cost-benefit analysis to see if comprehensive coverage makes financial sense for your situation. I pulled up a Kelley Blue Book value for a 2010 Honda Civic. A perfectly good car, by the way, and it's worth around $4,000. This is a common scenario for many car owners. Now, the average annual premium for comprehensive coverage is around $300. This might not seem like much, but it adds up over time. That means you're paying almost 10% of your car's value every year just for this one coverage. Over a few years, this can become a substantial amount. If you're comfortable taking on a bit of risk, dropping comprehensive can save you a significant amount of money each year. This money can be redirected towards other financial goals or savings. Just make sure you've got some cash set aside for potential repairs, just in case. Having an emergency fund can provide peace of mind and financial security. Chapter 5. The Annual Switch. Outsmart the system. Alright, last but not least, we've got the annual switch. This is how you outsmart the insurance companies at their own game. You see, they bank on you being complacent, on you just auto-renewing your policy year after year without even thinking twice. But here's the thing. Insurance companies love new customers. They're willing to offer all sorts of sweet deals and discounts to lure you in. And once you're in, they jack up your rates after the first year, hoping you won't notice or won't bother to switch. Don't fall for it. I recommend shopping around for new insurance quotes every 1 to 2 years. It's like hitting the reset button on those introductory rates. Trust me, it's worth the effort. I actually know someone who saved over $1,000 a year just by switching insurance companies. They were with the same company for 5 years, and their rates had been creeping up steadily without them even realizing it. Don't be that person. Be proactive, shop around, and watch those savings roll in. You got this. Time to save. There you have it, folks. 5 insurance hacks that they don't want you to know. Now, I know it can seem overwhelming, but remember, You don't have to do everything at once. Just pick one hack this week and focus on implementing it. Comment below and let me know which hack you're going to try. And hey, if you've got any sneaky insurance discounts of your own, share them in the comments below. Let's help each other out and beat the system together. Don't forget to like and subscribe for more money-saving tips and tricks. And make sure you stick around for the bloopers, where you'll see me trying to negotiate my insurance premiums down to $1 a month. It gets intense.